Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 7 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone had a great weekend, safe weekend. Let's make it a great week, folks. Let's take a look at one of our 4 agreements. Manifest your true intentions. Regardless of what language you speak, your intent will manifest through the word. What you dream, what you feel, and what you really are will be manifested to what you say each and every day. I got my partner Steve Rhodes with me out here today. We're going to be growling and prowling with all you tigers and tigresses. And folks, if you haven't tuned in at 9 a.m. Monday through Friday, Steve kicks us off at TFNN. Steve does a show 9 to 10. Then we do another show 10 to 11.
We do.
It's a
daydreaming.
It's a beautiful thing.
We can kick off our day, start daydreaming.
That's right. Growling and prowling through these markets. Let's take a look at these markets. Market-wise, let's take a look at it out here. We had the Dow down 25, NASDAQ up 22, S&P's up 3.5, gold contract flat at $16.29, silver off 5 cents at $28.69. Excuse me, folks. Oil down 92 cents, trading out at 83.11. Bonds up 6 ticks at 149.27. King dollar up 24 ticks at 82.21. Euro down 60. The yen up 40 at 79.12. Our phone number is 877-927-6648. Give us a call, folks. Well, I know what's going on in your world. In the world of the S&Ps, what do you have? You're up a couple bucks. And check it out, folks. You're at, let me just check this again. We're at 670 million. So it's 707 million. 707 million. We take out the 1.5 billion. Friday you had volume on the NYSE. Bottom line, we're going to have Tiger Gartleys all over the place here. We go to the Dow Industrials. We take a look at the Dow Industrials. Dow is flat, really. Dow 25, but really flat. Dow's at 12,750. That thing wants to basically, I mean, the Dow, really say what can climb up to 12,900, right? Because
it can, yeah.
It's already into the bar from the April 10th area. And the April 10th area, folks, is where the S&P is trying to get to. So if we go over to the S&P for a second, and we take a look at that cash S&P, your 8 point, well, here, you got a large ABC down. That's what we have here. Now we get a Tiger Gartley, actually, in the S&Ps on the way up. We just took out the B point. We took it out with lighter volume. The S&Ps can get it to 1357. We go over to the NASDAQ Composite, same setup in the Composite. Composite right now is trading at the 2895 area. Takes out the B point, takes it out with lighter volume. But it can crawl all the way up to this, actually it can crawl up another 50 points pretty easy. Pretty amazing, right?
With no volume behind it.
Oh, exactly.
You talk about being summer.
That's right. No,
Summertime has kicked in.
And, folks, it's very tough to do a Tiger Gartley. What a Tiger Gartley does, he has to take out the B point with volume, has to get into the larger A to B on the way down with lighter volume. And there's a lot of failures, meaning inside of that shouldn't do. So bottom line, the thing that's amazing, if we just go over to the 3 Qs, the 3 Qs in the SPY, if you just take a look at it, what's so neat about Gartleys in general, too, is that this A to B structure, now it doesn't mean it's going to fulfill the whole thing and get up to A to B equals C to D, but if it does, when you take it off the swing point from the first, it's a perfect 786, too, which I love. I like the 786 better than the 618 because the money management is better. Because you're close to the swing point.
Yeah, and folks, if you trade Gartleys, a Gartley is nothing more than an A to B equals CD pattern in a larger A to B equals CD.
Right.
Now in this case here, on the Qs, you're looking at the larger A to B equals CD on the way down. So if you miss that first move, what you're really looking for is you're looking to be able to sell that next A B equals CD pattern. And what Tom is talking about is those patterns can complete. They can complete at a 0.618 retracement. That would be off of the highs. In the Qs, that would be going back to your April 3rd area down to your low on June the 4th. But now, if you were to trade something like this from a money management, from a stop management standpoint, if you were going to trade the 0.618 Gartley, your stop would have to be above that 0.786 area.
Right.
If you can't take that kind of money management heat, then you can't take the trade.
Exactly.
And that's why Tom is saying, hey, I'd rather take the 0.786 area.
Right.
And then when 786 Gartleys fail, they turn into more than just a move of a move.
They go to the moon.
They'll turn into a butterfly.
Yeah, they'll turn into a butterfly.
You gotta love it.
Yeah, no doubt. 877-927-6648. Now, let's go take a look at gold market out here. What we had with gold out here, folks, bottom line, price spread-wise, not bad out here today. 1606 was the bottom, 1631, it's closing at the highs. 115,000 contracts. It's going to basically still need more than that.
Well, and it finished pretty well considering the strength that we had in King Dollar. Right. You take a look at what the King was doing today.
That's right.
So, a little counterintuitive there because you did have gold close up towards the high of its session with the dollar index having a nice big move today.
Totally. And, Steve and I, on our morning show, we were talking about the dollar. There's a study out, and this is pretty cool, folks, because you want to wrap your head around this a little. What you have here, Morgan Stanley came out with a study, and what they're specifically saying is that the world is $2 trillion short of dollars, meaning that there's that many banks and or firms.
Just the demand. There's so much demand for it. Even with all the printing that we've done,
that's right,
we're still short $2 trillion in essence,
exactly,
in the world economy.
Exactly, and the essence inside of that, because with any type of study, bottom line, you can say, well, so what? It's a study. Right? I mean, you can,
Yeah, read it,
yeah,
and you kind of, you say, okay, does this make sense or not?
Right.
Make your own decision.
Now, qualifying it inside it, and this is the big deal, folks, qualifying it is that we were looking at Hinkle. So the way they're qualifying this, number one, they're qualifying it as the flow of dollars in and out of central banks, what they're trying to get. But the biggest qualification that I really saw inside of that is that large companies overseas that have loans, we looked at Hinkle.
Yes.
Hinkle has an 800 million euro facility in Germany. And check this out.
That's just their credit line.
That's right. That's right.
Yeah.
If they want to draw that on dollars, folks, they have to pay 0.5% more, which we don't know what it's a 5-year deal, but let's picture if let's say it's 2.5%.
Exactly.
If it's 0.5%, it's 20% they're paying more to draw down a dollar versus drawing down euros, which is pretty intense. There's no doubt about it. It's wild.
And that's what's cool is when you see, you might throw out there and say to someone, look, these guys are going to pay 0.5% premium.
Right.
And somebody say 0.5%, that's not, versus, maybe 0.25% or something like that. Maybe it's not that bad. When you put it in terms of what that is to the interest rate,
it's huge.
Which is the proper correlation.
Right.
You're like, wow, that's interesting.
It's huge.
Yeah.
It's like, why is that? Well, it's that, folks, because there's more demand than there is supply. And the bottom line is that they want to push out euros versus the dollar. So, over in Greece last night, of course, what you had is that, they get some more breathing room. The rest of the European Union is going to have to write them some more checks. That didn't help Spain at all. Spain got absolutely smoked. The rest of Europe wasn't bad out here, but Spain, folks, came down almost 3% today. And, so we'll see how it wants to hit the bottom again. Right now we're at 65.19. Down $1.99, and
and the good news is that things didn't implode, last night, and so that was the good news. The bad news is nothing was really solved.
No,
so it's just kind of like business as usual.
Oh my God! Isn't it amazing the stretch out that that markets can do, that governments can do? There's no doubt.
It's just like it's a big poker game going on.
Oh, yeah.
Between all the central banks.
Well, the ironic part is that in Greece, the guy that won, that Europe absolutely hated him last year. They wanted him out. They wanted him out beyond belief. But what ended up happening?
Now he's their friend.
He's their friend because this new upstart is 34 years old, and the new upstart was flat out saying, "Hey, you know what? We're not paying the banks. We're going to wipe them out." Yeah. That's it. And that was like, no.
Yeah.
Okay?
Yeah.
So now they got you get the gist of it. It's pretty wild, though. No doubt about it. This is Steve Rhodes, Tom O'Brien. Listen, folks, don't forget about the Tiger Dollar special we have out here. You want to get a great education. You want to get a bonus on the amount of Tiger Dollars that you buy. We're matching either 20, 25%, or 30% bonus with 7 workshops absolutely free. This is the last week you can get it at TFNN. We're coming right back.